Hey, Daniel here from Rottweiler Tax, doing another great video here for RLT. In this video, I'm gonna give you the top 3 worst pieces of advice that CPAs have ever given to any of my clients. And if you're a CPA and you're watching this and you're thinking, oh, some uncredentialed guy is gonna tell us when CPAs are wrong, I can guarantee you at least 2 out of 3 of these we're gonna be in complete agreement on. So the third, in my opinion, worst thing that CPAs will tell clients is just set up your business on an Excel spreadsheet. Do your profit and loss and your balance sheet through an Excel spreadsheet. I don't like this for a number of reasons, but the biggest one is if you use an actual accounting system, you're going to use QuickBooks, Xero. There's something called reconciliation. So in the reconciliation process, the program is going to force you to identify every transaction that was on your bank and credit card statements. It's going to force you to classify those somewhere and then match up those transactions with your bank and credit card account statements. So if you have extra transactions in there, or if you're missing a transaction, you're going to know because the numbers aren't going to add up. They tend to find on average somewhere like $20,000 more in deduction. Number 2, we're going to start to get spicy here. So I have a client who has an LLC. It is an S corporation. All of his business income is paid to this LLC. He doesn't receive any of it in his personal accounts, at least until it runs through his company and to him in the form of salary or distributions. His previous accountant, for whatever reason, told him that he should keep at least one 1099 in his name. That is such a bad idea. I'm gonna tell you why. If you get a 1099 in your name and your social security number, and this applies to any document, if you get a W-2 in your name, any of these other documents that show how much money you made, how much income you received, you don't just get a copy for yourself. The IRS also gets a copy. So the IRS knows that you got a 1099 that said you made $18,000 of non-employee compensation. That's literally what NEC stands for. The IRS knows you got this 1099 and they expect to see that income reported on your personal tax return. You're in a scenario where all the money has been paid to your company. Half the reason the company exists is for tax efficiency, and yet you're gonna be forced to report a chunk of your income personally. It makes no sense whatsoever. In fact, I shared that story with one of my colleagues. My colleague is much more experienced than I am. He's like, I don't typically advocate for the poaching of clients from other accountants, but somebody needs to go and poach all this guy's clients because that is how bad that advice is. So it wasn't just me, I thought it was terrible. So the number 1 worst thing that a CPA has ever told a taxpayer that I have seen was that you do not have to take any reasonable salary through your S corporation. So when you make an S election on an LLC, and to be clear, an S corp is not an LLC and an LLC is not an S corp, they're apples and oranges, but an LLC can be taxed as an S corp. Most of you have S corporations, that's what you have. You have an LLC that made an election to be taxed as an S corporation. Okay, great. When you make that election, you file a form with the IRS that says, hi, I want to be taxed as an S corporation. The IRS says, okay, cool. They send you a letter in response saying, okay, this is when your election is effective. We've accepted it, and so as of this day, you're expected to file this tax return. By the way, on the right-hand pane of that letter, typically, there's a column, and it actually says, I'm paraphrasing here, but in accordance with Revenue Ruling 7444, you are required to take a reasonable salary or wage for the services that you provide to the corporation. It is a hard rule that if you own a corporation, especially an S corporation, and you are providing services to that corporation, as long as it has the money to pay you a salary, it must pay you a salary. A salary is not a distribution. A salary does not come through a 1099. The word salary means you are an employee. Being an employee means you get a W-2. You get a W-2 from payroll for your own company the exact same way you would if you work for somebody else. So I had a client who he had an existing S corporation. He made a considerable amount of money. It was in the 200,000 range, net profit. For a number of years, he'd taken distributions from the company, but he had not taken a salary. And when I first got with him, I said, this is one of the biggest problems I see is this is a major compliance issue. This CPA, rather than just admit that, oops, you should have been on salary the whole time, he actually tried to defend not having this client on any kind of salary, that the IRS does not provide a standard definition for reasonable salary. So they do provide a number of guidelines, and we actually calculate reasonable salary for a client before setting up any company. What the reasonable salary comes out to could make or break whether or not the S Corp is even going to be beneficial. And I've had a number of clients where we do not do S Corporation setups with them because it just would not pan out well because of their salary requirement. If you're on an S corporation, you're not supposed to take distributions from the company until you've taken a reasonable salary. So just to recap, number 3 is doing your corporate accounting through an Excel spreadsheet. I don't think it's a good idea. I don't think it makes things accurate. I don't think it gives you all of your deductions, and I don't think it prepares you well in the event of an audit. Number 2, if you have a company and you're getting paid through that company, you probably shouldn't be getting 1099s under your own name. The case of Fleischer versus Commissioner actually reaffirmed that. So the last one, if you have really any kind of corporation, but especially an S corporation, that S corporation has a profit and you are taking money out of the company, you must take a reasonable salary before you take distributions. Just because the IRS doesn't have an arbitrary number that they've defined as reasonable salary doesn't mean you don't have to calculate it. There's a number of guidelines that we use to be as compliant as possible, and that puts clients in a much better position. Hope you enjoyed this video. If you ever want to talk to me and my team, we'll put some links in the description to schedule an appointment if that's something you want to do. No pressure there whatsoever. Make sure to also check out Real Life Trading. I'm Jeremy Newsom's personal tax strategist. Been working with him for quite a bit now. Obviously, he was happy enough to put me on his platform, so that should tell you a thing or two. Make sure you check out Real Life Trading. If you're trying to learn about stocks, I talked about in a different video why I joined Real Life Trading, how I ended up having this relationship with Jeremy and with the community, and it's a very authentic story of like something I wanted to do ever since I was a little kid. And in that video, I talk in detail about what made RLT different, why I got into it, and the things I've learned and how it's benefited me. So make sure you check out that video. And if you're watching this in 2024, we actually have another big event coming up in the city of Miami for Real Life Trading. We're going to be doing a follow-up to the event we did in spring. I was at that event. It was an absolute blast, one of the most authentic business events I've ever been to. Very highly recommend coming down. Even if you're a brand new trader, I was brand new at the time. Being in that room full of experienced traders just drastically accelerated my progress in learning what I believe is just a skill at the end of the day. It's not really luck, it's a skill, it's pattern recognition. Jeremy describes a lot of these candle charts as the language of money. It's literally like learning to read a language that's like a symbol-based language. And eventually you begin to comprehend the language and you can kind of see the message that the stock is giving you. We just had a great run on Tesla. It's actually happening right now. There was a very clear pattern that formed that told us that was coming. I traded on that, Jeremy traded on that. We're both making money on that trade as of right now. So we'll be interested to see how that plays out. But join us this October if you want to meet us, and I'll see you in the next video.